All righty. Well, good morning, everyone. My name is Jesus Sanchez. I am the program director for the Great Lakes Restoration Community Grant Program. Welcome to this session around budgeting and how to develop your GLRCGP RFA budget, which is a part of this program and review process. I'm based in Cleveland, Ohio, and I'm going to start us off by just going through some general general reminders for the grant program before we jump into the actual content that'll be distributed and moderated and delivered by our grant administrator for this program, Justice Davis. And I think we have a special guest appearance today from our Vice President of Programs and Finance as well, Ashley Ross. Thank you so much for being on the call. Before we move forward, I do want to allow our program associate to introduce herself so people can put a face with the name if they're not familiar already.
Thank you, Jesus. Hello, everyone. My name is Lisette Perez. I am the Program Associate for the Great Lakes Restoration Community Grant Program here at Restore America's Estuaries. I am located in Chicago, and I help out with the communications, engagement, and outreach, and I'm very excited to have you all here today. Thank you so much for joining us.
Awesome. Thank you, Lisette. All right, so we're just going to move through. The first thing I'm going to start with is just a reminder of the timeline of our program. We are in the letter of intent phase. It was opened on November 3rd. There's still some time to submit that and get in the system. It's due on January 16th. That's a Friday. I believe 6 p.m. Eastern time, 5 p.m. Central Standard Time is the deadline to submit those. And just another thing to keep in mind is through our platform, our application platform, Unigrants, you could go into that and create your profile, your account, and start creating your draft and save your drafts. Just something to keep in mind for those interested in submitting those applications. Following that, we'll go through the review, and there'll be an invitation to submit full proposals in February. So February 23rd, those invitations will go out, and then full proposal deadlines for submission is in April 17th with a notice of awards in May. There's, for the letter of intent phase, there's 6 sections listed there. The content that's being covered today is specific to section 6 of our letter of intent phase. So it is a part of our review and overall considerations for awards and through moving through the application process. So this budget session is also just part of a series of different trainings and sessions as it relates to the Great Lakes program. We'll have an additional one on grant writing and building a strong narrative, which is on January 6th, 2026. So we encourage you all to register for that and just be on the lookout for any other upcoming sessions as we plan them and develop them and post them onto our webpage. And speaking of the webpage, all of this content, all previous content from informational sessions, past trainings as it relates to the program are posted on there. We now have a frequently asked questions or FAQ link on our webpage for questions that we've been getting asked throughout these past several weeks. You can access and download the request for application. You can create your account for the Unigrants as well there. So anything and everything is there. And also, if there's any questions or any challenges or anything that you encounter along the way, this is our contact information. You're more than welcome just to email us with your questions. We also have Calendly links to schedule conversations if that's something you wish to do as well. So just know that we're here to just support you all on this effort. Whether it's just determining if this is a good fit or not, or if there's questions about eligibility, we're here to answer your questions and support you in that aspect. And so that's everything that I wanted to cover before we get into the content. So with that, I'm going to stop sharing my screen. And I'm going to turn it over to you, Justice, and Lisette and I will monitor any questions as we go through the presentation.
All right, perfect. Thank you so much for that introduction, Jesus. My name is Justice Davis, and I am one of the grant administrators here at Restore America's Estuaries. Part of my responsibilities to this program and many of my programs is I deal with the financial, administrative, and compliance aspects of the grant programs. A lot of that kind of works together and is a little intertwined. I do have our Vice President, Ashley Ross, here, who has a wealth of knowledge. So not only does she know everything that I know and then some, she also has a strong background in science and doing some of these projects firsthand. So if you guys have any specific questions, she would be able to help and assist you with how to deal with those and how to roll that into the financial compliance and administrative aspects of your grant program. So right here, why budgeting matters. Budgeting is a very important part of this process. One,
Hey,
you
Justice,
know,
sorry, I don't think you're presenting in presenter mode. We still see
I do I
the
not see
front
my,
page.
oh,
Yeah, not
got
yet.
it. Let me in the slideshow. Let me do this and see if I can drag this over. No, I cannot. Why is that? Okay, give me just a second. Let me go back to sharing my screen. It shows in one screen and then it pops up on another. Maybe it's some computer settings I have. What about now? Can you see the?
Yes, that, yeah. Thank you.
Okay, perfect. Thank you so much, Lisette. So why budgeting matters? Budgeting is a very important part of this process. There are a lot of people who work in this space, kind of like me, who a lot of things don't make sense, but numbers in your budget categories, all that makes perfect sense to me. So that is a way to, one, align some of the work that you're doing with some of the costs associated with those activities. So it kind of gives some of us a roadmap and kind of helping you make certain decisions as you're working on this award and also making sure you're aligned and that you can complete the project on task, especially when you deal with certain things. So you have to show that your costs are reasonable, allowable, and allocable, and that's under the Code of Federal Regulations. The narratives are a very important part of this process, even though they're not required in the LOI phase. They will be required in the full proposal phase, and they pretty much give a little bit more explanation to the numbers. And then, when you write a very solid, good, and effective budget, down the line as you're going through the period of performance, really working on and providing some of this work that you'll submit in your proposals, it'll lead to a lot easier work and it'll help you make some more well-informed decisions later down the line when you have to deviate from certain parts of your program that you submit. So just a couple of rules for some of the budgets, just to kind of make you aware. It has to be consistent with your organization's written policies. Part of the reason why I'm telling you to do that now is because there's a point in this process where I have to engage in an activity called due diligence, where I have to review some of that information and make sure that it's aligned. And so the point of this is, for one, the federal rules are not written to create a burden on you. It's not written to make things more complicated. It's written to kind of make things work with the way you've already been doing things. And in some instances, what I will do for those of you who are selected to move forward and are selected for an award, kind of help you work those different policy documents together for the best intentions of your organization. And so we have to link those directly to work plan, task, and deliverables. And that is where your budget narrative is going to come into play. They also need to be transparent, so very straightforward. We're going to give some examples of the narratives and what really strong narratives look like. And how that kind of helps us out is basically we don't have to make any assumptions because what ends up happening sometimes is you'll submit information, and of course, we all have different experiences. So I may not necessarily understand what you're saying or what you're requiring or what you're trying to spend that money on, basically, if you don't kind of tell me, if that makes sense. So sometimes you have to kind of help us help you by pointing us in that direction a little bit, because again, we may have different experiences and we may understand costs as they work differently. And so the power is really in that justification. They have to be compliant. There are going to be some costs that are associated with your projects that we have to get prior approval on, and we'll let you know that information once we review your budgets. Another part of this that I want you to understand is even though we do an internal review and I will review some of that information and other people, these awards do have to go to the EPA and they do also review your budgets. And then just make sure you don't have any hidden costs. Make sure you're very transparent about that and some of the things that you'll deal with. And what we can try to do on our end is help and advise you as to how to work through some of those situations from a federal standpoint. So these terms are very important, right? When we're talking about reasonable, allowable, and allocable, these are your big three, right? So when we're talking about a cost being reasonable, we're talking about would someone in the same position as you pay that price under the same circumstances, right? So reasonable kind of speaks to, does the cost really make sense? And so there are different tactics and strategies and different things that you can do throughout the period of performance, or even while you're planning your budget to help you make some of those decisions if you don't know right off the top of your head. One of the things that I really want to stress and emphasize to you guys is that budgets are not going to be perfect because things are going to happen during the period of performance that are going to throw some of those numbers off. And so it's a matter of at the moment in time that you submit your proposed budget, did those prices that you submit, were some of the things that you're requesting, did they make sense at that moment in time? And as you move forward, when things like that change, there are different tactics and approaches that you can take to justify maybe getting rid of or eliminating some of those costs, maybe having to pay a little bit more different services. The key there, though, is you have to be strategic and you have to be able to pivot and maneuver through some of the situations. And of course, as always, we're here to help you with that. When we talk about costs being allowable, excuse me, when we talk about costs being allowable, they have to be necessary and reasonable for the performance of the award. And so it's going to take a little bit of thought and planning on your end to really decide, do you really need to pay for some of these items? It has to conform to the limitations and exclusions in the Code of Federal Regulations, and it has to be supported by adequate documentation. So as you're working through this award, some of the stuff that you submit on your budget, when you submit those requests for reimbursements, right, there's a level of documentation that I'm going to need. And so those are also other things you have to think about. And you have to keep that information on file for a certain period of time because at any point in time during this award, I could ask for that information, or maybe somebody from the federal government could ask for that information. And what we're doing when we're asking for that information pretty much is we're trying to make sure that we all have the same understanding of how money is being spent on a project. And then when we get into a lockable, so we're talking about direct benefits to the project. We're talking about things that are assigned in accordance with relevant benefits across projects, and I'll go to that in a little bit more depth and detail. And we're talking about things that you're not going to shift to overcome funding shortfalls or avoid restrictions, and we'll talk about that a little bit more as it applies to certain cost categories. And so usually if something is reasonable and it's allocable, which means you can allocate that cost to the award, it's usually allowable. That's generally how those three terms work together. The cost makes sense. You can allocate that cost to the award because there are some costs that are not allowed, and those stipulations are set by the federal government. That makes it allowable. The other thing that people have to worry about is consistent cost treatment. And so when you're making these budgets, you have to kind of align that with what you're already doing internally. And you definitely need to align that with the way that you want to do things internally. And so as you're applying for more awards, if you've already previously applied for more awards, what happens sometimes is that you're in different spaces at different times as an organization. And so at one point in time, you may have budgeted a cost category or a certain cost in one category, but then for a different budget, you put it in a different category. And what happens as you are working through these processes and times, what I've seen in my experiences is that it causes a little bit of confusion when you have to do some of those reports where you have to report out because you may have one program where you put a cost in one area and then you have another program where you put a cost in a different area. So sometimes that makes it a little bit harder on the people on the administrative side and the operations side of this kind of really decide how to do those reports sometimes because that's an inconsistent cost treatment. And so you have to really think about that. Now, sometimes that makes sense depending on the award. Sometimes it just kind of depends, but keep that in mind especially when you're thinking about the policies you have. Now, I know I mentioned that I'll be reviewing policies, and I don't want you to be, nervous if you don't have certain policies. In certain instances, that is okay. Most of the time, what we'll tell you is that you have to defer to the federal government's policies and how they handle certain costs and what they already have if you don't have a policy in a certain area for dealing with a specific type of cost. And we'll go over to that in more detailed context as we're working through this PowerPoint and this training. But pretty much you'll use consistent cost treatment to kind of help you decide how you want to write and draft policies going forward when you get to that point in your organization's development for really helping you be effective in managing some of these federal awards. And so the first cost we're going to talk about is personnel. Personnel is very straightforward. Salaries and wages of employees working on project tasks. Now, this one gets a little tricky sometimes because you might have a lot of people, depending on how your organization is structured, working on those tasks. Sometimes you'll have an executive director, a communications director who are performing certain responsibilities with respect to the award, where sometimes you can allocate those costs directly to the award. Sometimes you'll have to put that in a different cost category, and that's the indirect cost category. So as you're planning these budgets and you're planning the submissions, really think about what their role is in the project and if that's directly related to the award or not. And so when you're doing the narrative justification, some of the things that I want to see indefinitely, I want to see the job title, the percent of effort, the hourly salary rate, and the role that they play in project. And I'll give you an example on the next slide. And these are the documents that you're going to try to refer to internally to help you make some of those decisions. So there's the personnel policy, your timekeeping policy. And then when I ask for proof of this documentation, if you are selected for an award or just as general knowledge for any award that does cost reimbursement, I'll ask you for payroll records and timesheets. And that serves as adequate documentation to really help you or to help us determine that you spent that money on what you said you were going to spend that money on. And so here are two different narrative examples that we're giving. So example one is for the salary basis, where we're looking at the salary that that individual has, right? So we've determined that their level of effort is 25%. That gave us 520 hours divided by the number of hours per year. And then notice how at the end I'm talking about what that individual is specifically doing. The other example I'm giving you is doing it on an hourly basis. Now, I want to go ahead and advise you and tell you that these look a little bit longer, but if you notice, these are like one, two sentences maybe at max. So when you're doing these narratives, it doesn't require a whole dissertation or a paragraph, just enough detail so that way we kind of know what's happening with some of these costs. That's going to play a major role in the review process when we're looking at some of these proposals and helping us determine if that cost makes sense towards the award or not. So the next category I want to go into is fringe benefits. That is directly associated with personnel costs. And so your associated costs are things like FICA, health, dental, vision insurance, retirement contributions, unemployment. Those are generally things that are a part of compensation that you're not necessarily directly paying out for the employee, but you're paying as a result of having an employee. That's going to look different with every single solitary organization. And how you justify that in a budget is also going to depend on how you handle that. And so it's kind of the same thing. You want to show your fringe rate, though, in your narrative justification. You want to confirm that you're using that consistently across all of your programs. And then you want to kind of explain some of the components. And so some of the policies and documentation are your personnel policy and your benefits policy, are the information that I'm going to review when I look at this to make sure that it's aligned with what you're already doing internally. Part of the reason why I'm going to review a lot of that documentation is because the federal rules are also not designed to give you an advantage. And so this is one of those budget categories where I'm going to have to see that you actually have that already in file, already in place, because what I don't want to do is accidentally give you an advantage. Years later, you go through an audit, then something goes to the left. It's a possibility. So what I'm also doing in reviewing a lot of this work is just trying to make sure that we all stay aligned with the federal rules. I'm trying to keep everybody out of trouble, and I'm trying to keep everybody away from any unnecessary stress and anxiety. And so there are two different ways that you can put your fringe benefits rate in as for a justification example. So most of the time, a lot of organizations, they apply the same rate and give the same benefits to all their employees no matter what. And so that's the rate methodology right here. So if you notice right here, it's saying fringe benefits are calculated at a total rate of 30.4.5%, and it's giving me all the components in it of how it came to that percentage. The other one, though, is a direct charge methodology rate. Now, this just kind of depends on how you do things as an organization. I know a lot of times organizations have an opt-in method to say that you can choose or elect your health benefits or the type of benefits that you want to. We'll pay a certain percentage and you pay a certain percentage. Now, just to be clear, the part that you want to charge to the award is the percentage that you pay and not necessarily the percentage that your employees are paying as a part of your benefits package. And actually correct me on that if that's not 100% accurate, but I believe that's the way that that works. And so what you're doing is you're talking about those employees, some of them who have health insurance and some of them who may not have health insurance because you allowed them to opt out of that. And so that's only in special circumstances where you may not necessarily apply a flat rate methodology to the employee benefits that you pay for. Kind of totally at your discretion. That's some internal conversations you have to have on your end, and we definitely respect the autonomy of you to make those decisions. But it's just a matter of you really deciding where that sits and where that falls and how you kind of want to articulate that.
Let me throw in there, Justice, for everybody. So rate methodology is applied across all of the employees that would be working on the grant. So that 34%, 34.5% in the example is what everybody would be charged. So you can have one lump fringe benefit calculation. If you go with, and because this is your organizational policy to do a direct charge, you would list each individual with their individual rates that they're charged by the salary that's going to be charged to the grant. So it's a little more complex. And you can see that there's going to be a different face, right? One, you could do one lump sum. This is total salaries charged to the grant times 34.5 versus one that's a little more, I would call it variable. So you could have one employee that only has FICA and retirement, and you could have another employee that does the single health insurance plus the FICA plus retirement. So you can see that those rates would vary a little bit. Either one is perfectly valid. We just have to know that it's being applied across the board. So you either do one or you do the other.
Thank
All
you,
right,
Ashley.
I'll turn it back to you, Justice.
All right, so travel, it's another cost. So example of costs that are under the travel category. Field work travel, that's usually, well, I have listed here as mileage, and then travel to meetings that are required. So we do have an annual learning exchange tied to this program that we do every year. You can travel that directly to the award. We do a summit where we get all of our sub-recipients together. You can also charge that directly to your award. And so the things that you can charge that fall into this category are lodging, airfare, mileage, and per diem rates that follow the GSA federal rates, unless you have a policy that kind of sets these rates. Now, a couple of places to be careful with travel costs, especially, is you want to decide what rate makes the most sense. Most of the time, if you don't have a policy that sets that out, we usually go with the federal rate standards. The federal rate standards change on an annual basis most of the time. Not by much, though in some years I do see a significant increase. But for the most part, you're going to want to land on one of those years. And that mileage rate kind of survives the life of the award. Now, what you can do through the period of performance is if that mileage rate goes up, or say, for instance, you're using a state rate, because I know that some states also have a mileage rate, right? Either or would work. You just have to be consistent in the rate that you're using. If that rate goes up during your period of the performance, you can charge at that higher rate when you do reimbursements. You just have to be aware that you may not necessarily get any additional funds to cover the cost of that new rate. So just keep that in mind as you're performing on the award. Go ahead, Jesus.
Yeah, I didn't want to throw you off. I just want to, when you get a chance, Justice, we have a question in the
Oh,
in the chat, and I can read that off to you when you're done explaining this slide.
okay, yeah, no problem. So you want to talk about the travel and the purpose of the travel. You want to give the estimated cost, right? Because we know that costs change all the time. You go in, you try to book an airplane ticket one day, you go in the next day or even the next hour sometimes, and it's $100 more. And then you want to confirm that with your organization's travel policy. So some of the documents that I'll be looking for is a travel policy, the receipts, the mileage logs. Now, as you're doing work on these awards during the period of performance, one thing that I want to caution you on is to make sure that you and the people who you're going to be reimbursing for some of these expenses always try to use some electronic form of payment. The reason for that is because receipts get lost all the time. And so what we can sometimes accept in very rare cases is we can accept, someone's bank statement that shows a charge on that. But if they pay for that in cash, cash is a little bit hard to track if for whatever reason a receipt is lost. So try to keep that in mind and try to make sure that the form of payments that you're using or that you're using to justify reimbursements are traceable and trackable, and that's by using an electronic means of payment. And so here are some examples of how this will work out in the ward, right? We have the first example is field travel, where what we're going into is a mileage reimbursement, basically. And that is just local trips because you'll have to travel to and from different places to perform work on this ward. So it's got 8 trips, 150 miles. That 0.67, I believe now, is the current federal mileage rate, and it's giving you the total cost of that. So when we're doing a narrative justification for that, you're telling me what it's for, like the travel is required for shoreline monitoring activities, and it's showing me how you got to that cost calculation. That is very important. The example two is for a conference or meeting. And so it says the project coordinator will travel to the annual GLR partner meeting, airfare, $350, hotel at $150 a night times 2 plus per diem. Travel supports require project coordination. Now, one of the things that we often stress while you're performing on these awards is, of course, we want you to spend all the money, right? Sometimes we know that can't happen. That doesn't happen because, sometimes you get a discount for whatever reason, or the flight costs were a lot less than you anticipated. That is totally okay. We're just trying to get a good estimate. So if you have a policy in place, that's a good indicator for us that you're going to fall within those guidelines. Now, if you're a little lost, there is a website with additional resources that I will share with Lisette that you can go review, and that's the GSA website. So GSA stands for General Services Administration, and they have a ton of resources that'll tell you how much a hotel will cost and airfare and different things like that to certain places that you're traveling to. It'll also set per diem rates. And so any of that information that you don't have, I encourage you to use that website as a resource, and I will give that to Lisette to push out to this group. So you'll have access to that information. So that way you can kind of use that in the planning process as well to get you to some more realistic numbers. And then the last part is local commuting, which is kind of similar to mileage. And here are some additional factors to include. Always make sure you put the purpose of the travel, the number of trips, mileage per diem. Um, Make sure when it comes to per diem, because most of the time people don't have that as a policy. And again, that's okay. Try to align that as much as you can with the GSA rates, or if you have a policy in place, right? Make sure you align that with your internal policies. Connect that to the project task, of course. Specify, when you're traveling, if it's local or overnight, that does change things a little bit. And then let us know who's going to travel to these projects. All
Hey,
right. Here's a
Justice,
question.
can
So I
I
have,
can I throw
yeah,
something in there really quick?
absolutely.
All right. So for 2025, the going rate is 0.70 cents, but for 2026, I have not heard what that is yet. It will be going up. So make sure you keep up with that. We will also try to check that in the budgets to make sure you're collecting everything. I know some of the frustration can be, how do I know where these trips are? How do I know where the conferences are? So usually what I do is I go and I find where last year's conference is or the year before. I assume it would probably in a similar distance. And then I pick the one that's farthest away so that I give myself the best chance of being able to cover the full cost. So for instance, if I was planning a trip, I live in DC. I know that the last 2 years a conference was in New Orleans. I'm probably just going to plan that it's going to be in New Orleans, right? Um, and I'm going to pick the most expensive flight, assuming that prices don't usually go down, prices usually go up. So let's assume that we will cover those costs on the grant. So better to ask for a little bit more. Don't be too, crazy with asking for a little bit more, but be reasonable, ask for a little bit more, cover your cost, and then if you have a little bit left over, we can reallocate that to some other cost hopefully within travel, that maybe you didn't guess quite high enough. So sometimes, yes, when you are doing a budget like this, you have to guess and do your best guess as to where something is going to be rather than having all the facts. And then we'll flex with it when we get more details. Anyway, that's all I got.
Thank you for that. All right, so we have a question slide. And Jesus, you said you had a question for me?
Yeah, we have a couple questions in the chat. I can probably have a second one, but the first one is around indirect costs. So it says, since 10% of the total budget can go towards indirect costs, does that 10% limit pertain to personnel who are implementing the project? If not, what is the cap or recommended percentage on salaries for project partners specifically?
So we have a slide that we're going to go into that a little bit later. And so I'll
Okay.
make sure I bring that back up. But pretty much there's this thing called the modified total direct cost rate. And I'll go into that in that slide to explain to people how the 10% de minimis rate works if they're going to use the 10% de minimis.
Okay. And then the second question I can likely answer, it's where can we find location information for these GLRCGP required meetings and how far in advance are they announced? And so Justice was referring to the annual learning exchange, which is intended for those sub-recipients and awardees of this grant program. We actually, had that in advance this past year in September, going into the announcement of the grant, as we were given the guidance to move forward with outward facing initiatives. And so that annual learning exchange is a yearly thing. It'll likely happen from my viewpoint in the fall. But to Ashley's point about utilize, and it's going to happen within the region. We did it in Rochester. It's not going to be outside of the Great Lakes to give you a sense of what that travel cost might be in it. And it's a day-long event. But hopefully, we can give at least anywhere between 5 to 7 months advance notice for some of those orgs. But just something to keep in mind as you're building out your budget to, include some sort of estimate of travel within that proposal. So right now we're planning for the learning exchange in 2026. We're anticipating it to take place in Detroit on the heels of another conference to minimize the amount of travel for organizations and groups. But we're realizing that there may be a conflict with our own race summit in terms of the timing and location of that. So there might be some adjustment on our end in terms of where the annual learning exchange takes place in 2026, but more to come hopefully in January on that.
All right, Ashley, I'm going to let you take over these because these get a little bit more complex. And as much as I understand that, I feel like you have more of a technical knowledge to kind of really help the sub-recipients wrap their mind about how to handle these costs. So,
All right. I'll let you be in charge of the slides. I'll let you know when I need to move them. Okay?
okay. Yes, ma'am.
All right. So let's talk about equipment really quick. And you may not need equipment, but it's important to cover just in case it's part of what you're planning your budget is. So equipment is something tangible. So it's something that you can put your hands on, furniture, it is fixtures, maybe it's machinery that is worth more than $5,000 per unit and has a useful life of 1 year or more, right? So a couple of things that we have to be able to understand. We need to understand why it's necessary in order for you to meet your objectives for the project. We need to know how many, what the cost is per unit, and we need to know what its purpose is within your project. And of course, address any thresholds. So the federal is $5,000 versus perhaps your organizational threshold for listing what equipment is much lower. I had an organization, their equipment threshold was $300. So anything over $300 and it met the other criteria, we had to count that as being equipment. So you can see there can be some differences based on your procurement, your organizational policies. So a couple of the documentation items that you're going to find is procurement. There has to be an equipment and property management policy. If you're using purchase orders, or at least what your procurement is, quotes based on the dollar amount. There are procurement laws as to whether you need 3 quotes or whether you can do, a single supplier or sole source. And let me tell you, this can be very complex. And if you are a one-person procurement office, come ask us. That's what we're here for. I'm always Justice's backup. I will meet with you with Justice and Jesus and everybody as needed, but that's what we're here for, is to be your support to make sure we're in compliance. And that means also in your planning processes. There's an inventory log. We need to have your invoices of what has been paid after it's received and receipts. So I will say this is huge, right? It can be very overwhelming. And I'm going to reiterate this when we get to supplies as well, because they're kind of tied together. But I'm going to show you a couple documents that we also have and we'll send to you after this call. All right, Justice, next. All right, a couple examples. So example 1, specialized monitoring equipment. So maybe you need a GPS mapping unit worth $6,200, obviously more than the $5,000 federal level. And you are going to use it to document restoration boundaries and monitor project progress. 100% worthwhile. Is it replacing something that already exists? Is it an upgrade? If we understand some of those so we don't get broadsided by a lack of information, let us know. There's nothing wrong with telling us, hey, this is a replacement for something that existed before, and this is why we need the newer one. Because it's more accurate, it goes down to less than a meter, whatever those requirements are. If we understand, it's easier for us to approve and move forward. Example 2, boat motor replacement. Obviously, $7,800 to get this replacement. Why do you need the replacement? So it says will enable access to restoration areas not reachable on foot. What happened to the first one would also be my question. So did you have one before? It got wrecked in the last hurricane. Big storm surge rushed it on shore and it bent the propellers, right? I have seen lots and lots of different examples. But if you're going to ask for a replacement, tell us why you need the replacement. How does it apply to the project? So the cost must be greater than or equal to $5,000 per unit. Must have over 1 year or more of a useful life. Must be tied to your project tasks. Prior approval is required for any equipment purchase. Just keep that in mind. Prior approval is pretty easy, but if you don't have it in your budget, we can't approve it unless we go through an amendment process. And it's all doable. My goal is to always get to the yes. How can we work with you? But you can see if you plan for equipment in your budget, it already has approval. It simplifies our process. And make sure procurement standards apply. I think that's all I have to say on that one. Supplies. So supplies and equipment are easily confused. And the sheet that we'll pass out does split those out. For the sake of reference, when I say property and property management, it applies both to equipment and to supplies. So a supply is a tangible item that's less than $5,000. It needs to be consumable. It could be software, could be small equipment. They need to be grouped or itemized by type. So please make sure you split them out. Don't just say general office supplies or general field supplies. I need to know what they are. So if you're talking about chemicals and the purpose of the chemicals, say it's a flocculant to make sure that the the water, is clear at the top and everything inside goes to the bottom. Hey, tell me it's a flocculant chemical and this is what it's being used for. If you are truly doing paper and pens and other kinds of things, list those out. Give me how you came up with the cost. So tie each supply to a specific project activity. So one example that I find really common would be we have a lot of field leaders. They're out in the field. They need waterproof paper. They need a pen or pencil that will work when it's wet. And they need something to write on. So that is required for doing project work. Letting us know how it relates to the work really helps us understand your needs and be able to approve things moving forward. So as it says, avoid the vague. Vague, I'm always going to ask for more detail. So if you can provide more detail and you find that fine balance between, hey, you don't need to know I need to buy 150 of these and 300 of this, and they're all part of the same chemical. I'm okay with that. Just tell me that I need those 3 groups of chemicals and they're all flocculant supplies, right? So hopefully that helps. Some of the policies and documentation, also procurement, equipment and property management, purchase orders, or what other method of a purchase that you're using. Maybe it's credit cards. Your vendor quotes, your inventory log, your invoices, and your receipts. Now, let me show you what I mean by a couple of these other ones. We will send these out as examples. But, oh, wait, I can't. Can I share really quick? Wonderful. If it will let me. Oh, there we go. Sorry, guys, just a second. Hopefully you can see my screen. All right, so this is our Federal Award Property Management Guide that we'll be sharing after. It outlines the definitions and the expectations based on the dollar amounts and other items that we've covered, but not nearly enough detail for you to really understand what we're going for. But what I really want to show you is if you do not have a property management inventory system or process, most organizations do, whether that's through your accounting system or through a separate process, you can use those for tracking. But if you do not and you need a template, this is a good template that we will share with you that has all the items that we require in order to track things that need to be tracked. I call them, tagging and tracking. And that is outlined in that property guide. And then I'll get into this one in a moment. Yeah, so I'll get those for a moment. So let's go back and we'll finish up my little portion of the slides. Justice? Wonderful. So a couple supply examples. Water sampling kits. So, if you need 10 kits, they're $85 each for $850 with a brief explanation of how it applies to what you're doing, how it applies to the project. This is a good example that if you had a water sampling kit and you had one for freshwater and you had one for saltwater, if they are the same price, they could be bundled together because they'd have basically the same purpose. They're just 2 different variants. If they had different prices, you could 100% do that. Just add, say, 10 kits for saltwater, 10 kits for freshwater. The saltwater is 85 and the freshwater is 75, right? So we know how you get to the final total on that category, that item. Sample bottles. So this would be, different sizes that you need for sampling. I know some samples you get bigger ones for titration and you have other ones for other purposes. So those can be gathered into one sample bottle cases. Just give us how you came up with the total. So a good breakdown of that as an example. And of course, field notebooks, like I said, whether it's waterproof or not waterproof, or we need a variety of specific sizes that our crew uses, our volunteers are tracking, whatever it is that you need, we just need to understand how you came up with that total and how it applies to the project. And then if you're looking at the full category, so field sampling supplies, this is a really good way that you could 100% gather those into one category. Field sampling supplies, just give us a breakdown as like this example of, number one, how did you come up with the cost? Number two, how is it being used in the project? Right. Let's move forward. All right. Contractual is interesting. It can be quite challenging sometimes. Okay. And so contractual, you can have consultants, you can have contractors, and you can have partner organizations or institutions. So make sure that we define the scope of work and why this is outside of what expertise is required. So why is it that they are required? So in other words, perhaps they have a specialization in running heavy equipment. Perhaps they have a specialization in social media, and that social media outreach, they can offer this benefit outside of what you can do as an organization. We just need to be able to understand that. Show the estimated cost and procurement methodology, and describe the expected deliverables and timelines. So be very clear, is this a 4-month project out of a 12-month project that we're going to hire this contractor for, or is it the 12 months of the entire project? Make sure you have your procurement policy, your solicitation vehicle. So was it a quote? Was it an RFP? How did you come up with, or how will you come up with how you're going to hire them? Are you taking bids? Did you do department checks using the sam.gov and having a signed contract? The signed contract can happen after if you list that in your justification. So if you know you need 3 months in order to bring them on, make sure you state that. So within 3 months, we will have a signed contract as we go through our procurement process. Next. All right, so a couple examples. Habitat restoration contractor. This is a really good example saying that they're going to be hired to do invasive species removal across 12 acres of wetland habitat, which is under task 3. And so you'll need to supply all the labor, equipment, and materials. Well, the contractor will. So if you're supplying volunteers, you would list that versus them supplying everything. So if there's a break in the work, or there's some of it that you're doing, some of it they're doing, just be very specific about that so we have an understanding of why the cost estimate may be higher or lower. And how it was based. So you also need to have an idea of what deliverables you'll be asking them. So to be very clear, yes, you can develop those. This is the LOI. So do you have to have every answer right now? No, but you will probably by the time you get to the full application. So it's good to have a good solid base now that you can develop as you go. So think about what is the service that they're providing. Think about what deliverables. They have to have a deliverable. So if they're saying 12 acres, make sure that you are accounting for what they are doing on those 12 acres. What is the basis of the cost? what procurement method are you using, and do you have a consultant, a contractor, or a subrecipient? And that's what we'll actually share is I have a list, kind of a guide. I won't go and show that to you for the sake of time, but essentially help you make that decision. We use a checklist that helps us decide where it falls into that. There are many examples. We cannot give you our exact example because there's some rules about making sure that you're using your organizations. Anything that we provide as a template is purely just a template. It is not meant for saying you have to do it this way. There's too many different ways you can do this. And of course, how are you going to do indirect cost? Is it part of the contract or are they not charging it at all? We need to understand that. All right, go ahead, Justice. All right, any questions? I saw that there was one.
There is one.
Yeah.
There's one.
Go ahead, Jesus. Sorry.
It's quotes. You need quotes if planning on working with a specific community partner org.
So usually when I do contracts and I'm doing a grant budget, at least in the LOI and even the early phase, I would at least have a conversation with the people and get an estimate, or based on historic work I've done with them, I could base my estimate on that. But if you're using a historic examples or historic, this is what we've always done, this is what the cost has always been, make that statement in the justification so that that is valid. If hey, we've worked with them for 5 years and we've had the same price, great. But if they're brand new, I would say make sure that whatever you're quoting is based on at least the initial conversation.
So you want to need
Ju-
competitive quotes for that.
The competitive, well, so that depends on dollar amount. It depends on organizational policies. So I would say have a conversation if you don't know with Justice and myself, and we'll help you understand what some of those things are. You know, your procurement office probably knows, but we can absolutely help provide some guidance as well.
Okay.
Justice?
You're on mute, Justice.
Thank you. I'm going to finish this up here for the sake of time. I'll go through this relatively quickly. So we have other direct cost category, and those are things that don't necessarily that are required for the award, but they may not necessarily fit into another category. So some examples of that are meeting room rentals, fuel if you're directly purchasing fuel for boats and equipment, printing, software subscriptions, and training fees. Now, just to advise you, sometimes some things you may look at and think that they're other direct costs. It's kind of how you do things as an organization, right? So if it can fit into one of the other categories, the recommendation is that we request that you put it there. But if you have a traditionally different way of categorizing some of those costs, like software subscriptions, could arguably go into supplies or maybe another category. However, if you just don't traditionally categorize it like that, or you feel like it's better suited in this, that is at your discretion. Same thing like with any other narrative justification, you're going to want to explain the cost. Again, the power here is in the justification. And then the last one is indirect cost. And so this is the administrative overhead, things like utilities, HR, IT, rent, benefiting multiple programs. And so you either have a NICRA or you have a 10% de minimis rate. If you have no idea what a NICRA is, 9 times out of 10, you probably don't have one. So that's nothing for you to worry about. But this 10% de minimis rate is a little bit interesting. Let me just go through this. So here are some narrative examples. One of the things about this de minimis rate, though, that you have to understand is that there are certain costs that you cannot charge to an award under the de minimis rate. Some of those costs are things like participant support. If you have participant support in your application, you traditionally cannot have that into your NTDC de minimis rate under that 10% threshold, so that will not count. Equipment is another one of those things that you cannot in the modified total direct cost rate. I'm not good with acronyms, so I'm just going to say it out every time. And then certain contracts and subawards over $25,000. So you can claim up to $25,000 and get the indirect on that, but anything over that you would be excluded from. So that's how the IDC works when you're using the de minimis rate, kind of a short Cliff's version. So just to sum up here really quickly, right? Some good examples just to help you with budget narratives. You make sure you're writing in plain language. Make sure all of your costs are linked directly back to the budget and you have those plain narratives to really help justify that. Always show your calculation assumptions. That helps significantly, especially as I'm reviewing, because one thing that I will do is go back and I will tell you that I've had to make adjustments because maybe the calculations didn't match what you calculated at. And that's just set up for a conversation. Not too much of a big deal, but it helps us help you, if that makes sense, if we know how you got to certain cost. Flag a prior approval items in the narrative. And so most of that I will be doing, but we just want to make you aware equipment and other costs we're going to have to get prior approval for. And we'll let you know those things as you come across that. And avoid the vague justifications. Things like miscellaneous supplies are not really giving us the context and detail here. Again, that's kind of the part of the application in the budget process that you use to help us help you. All right, last side. Any questions? Because I know we are pressed for time and we've got a minute left. So just to make you guys aware, we will set up some open office hours if you guys need help. Now, the help will be limited because there are certain things that I cannot tell you. There are certain things that I cannot do because I don't want to adversely affect the full and open competition and the values that we have there. But I will be able to help you do things like calculations and determine your MTDC rate and help you determine if costs are allowable, things like that, or just say we can't add this to the budget, and so you'll have to find a different way to work around that. Any questions, Jesus?
No, I just want to be mindful of time. I know we're slightly over. And I know it was a lot of content, so we will make this recording available on our website. Again, if you have any follow-up questions or want to schedule a technical call with any one of us, please feel free to reach out. And I just want to thank you all for your time this morning. Thank you, Justice and Ashley, for your expertise, and Lisette for your support. And have a good day, everyone.